Hello traders, in this video we are going to start learning about trading. So trading involves many things. So basically to do analysis for us we need chart to look at it. So what chart contains is candlesticks. So candlesticks, basically we will follow Japanese candlesticks, and based upon the colors you will decide chart will show. So by default chart will show a green candle for bullish movement, a red candle for bearish movement. Why it is bullish bearish means the movement to the upside is called bull movement, the movement to the downwards is called bearish movement. So based upon the movement of the price, the candlesticks prints. Okay, for on the screen we have two candles. One is green candle, which is bullish candle. One is red candle. One is bearish candle. So let me say something. There is something on the screen. This is a candle, right? It have wick. This is called wick or shadow. Up to this price has moved, but the candle closed here. The same here as well. So there is a price movement to the upside and downside. Wherever the full body is there, it only have value on the technical analysis side. Price might have print a high, but closing is important. In some conditions we will see why it is where it is. Okay, so let me start to say about this candle. For example, this is a green candle, this is a bullish candle. Where this candle has opened, so bullish candle opens the body below, closing will be here, and the highest point it has reached or it set is this one, and this is the lowest point it has set. Okay, so this candle opens here. This is the rule. This candle opens here, closes here. If any high point it printed, high will be there in the form of wick. Low will be there means it will be formed a wick. But the bear candle opened here. So this is how it happens. The same in the bearish candle, high and low will be same, because in if price movement moved from 846 to since the price scale is in descending order, if anything moves high to the upside, it will be high only, it will set only high points. If any movement it will go down, it will record a low point, right? So in the same way, here we have opening here and the closing here. So in both on bearish and bullish candles, price moves high means it will set high price, low means low price, but where the opening and closing it matters. So if you see in this bullish candle, candle opened at the point here, it went low like this and it went high like this, but closed like this. The same way in the bearish candle, candle opened here, went to the upside, and then further went to the downside, but unable to close below, closed here in that particular point of time which we are looking 1 hour time frame. So this is the basic understanding of a candlestick. Okay, further we will see what kind of candlestick patterns, which one adds value, which doesn't make sense, so which is helpful for us, we'll see. Okay, this basic candlestick pattern, open, high, low, close will be there. If you place your mouse pointer anywhere, here open, high, low, close will be there on the chart everywhere. If you move your mouse pointer here or here on any candle, it will show here. Since I'm in annotation mode, it won't show. Okay, now you can see when I move my cursor here, you can see the open, high, low, closed of the price here. Okay, let me move like this. So on this candle, open, high, low, close, here values you can read. Okay, and any point. If it is a red candle, the open, high, low, close will be in red. It is green candle, it will be in green. So like this you can see. Sometimes it is difficult to know what is the open, high, low when there is multiple candles is there. Okay, to understand that, if you place your mouse pointer, you will easily get to know. One more thing is you can use this magnet tool. and then a line like this. If you press shift button, it will give a straight line to you instead of any cross things will not happen. It will be a horizontal. Okay, if you want to draw vertically, same thing you can do. You can draw vertically as well. So let's say if the candle has opened here and candle opened here and set a high point here and the closed here, it is high low. Okay, so based upon this we will have some candlestick patterns. Basically we will see an engulfing pattern. This is an bearish engulfing. You can take a screenshot or anything, you can write notes. Basically if you google also, you will get to know what are the candlestick pattern is there. So basically which is usual, I will tell you those patterns only. Okay, so in this there is an high and low printed in this candle, which the bearish candle took the low and it fully engulfed itself. Okay, that is the reason this engulfing pattern will happen. So in textbook or somewhere you can see like this handle, but basically it won't happen unless there is a price open with a gap up or something. So basically there is a rule: open, high, low, close of the candles. Open here, close here, high here. When next candle open, it will here only it will open. Okay, so basically it will happen like that only. So this is an bearish engulfing pattern. If the same thing will happen in reverse, okay, like this something. So bearish candle opening at the bottom, let me annotate. So bearish candle opened price here, closed here, it's at a low point, it's at a high point. So bearish movement means it is expected to further go down like this. But what happened is the next candle fully engulfed the high of this candle. Okay, this high closed, this candle opened here, closed here. If it have any wick, it might have a high point as well, a low point. Okay, bearish engulfing, bullish engulfing, this is the basic thing. This is the case of bullish engulfing. The reverse is bearish engulfing. Okay, so this is engulfing pattern, and then we will see further there are different types of candle market prints. For example, this candle have a body like this. When like this candle forms, you can see the open, high, low, close and all where it formed, right? So bearish candle opening will be from the top, closing will be below, upside movement it did, downside movement it did. In every candle you can see this. This is the opening price. This is the opening price. This is the closing price. Just give me a minute. Okay, we got it. So this candle set the highest point here, lowest point here, it opened here, it closed here. So this kind of price action candle we will call it as hammer pattern, hammer, bearish hammer pattern. Okay, this means price did a movement like this, it went down further, it is not able to go to the downside, it went to the upside, instead it closed here. This part of the position, it is forming this body. Okay, so opening here, closed here, high here, low here. Okay, this is hammer pattern. Some patterns will be there, like a candle forms very small body, okay, with wick or without wick. These candles are called as base candles. This candle is called a base candle, which is smaller than previous candles. I'll show you the examples after. So this is an base candle. Some types candles will form like this. This is called a dozy candle. There will be nothing much bigger body than a base candle. Okay. Difference between base and doji is base might have a little body, but a doji will have very minor, like this, a small body. Okay, a doji like this will look like this. Sometimes it might be in the upside. Okay, different candles have different names. Okay, so most of the time we will see a base candle, a doji candle, a bullish candle, a bearish candle. So next it will form engulfing candles. Okay, so engulfing, we have said like there is a candle like this. To make it a bullish engulfing, so to make it a bullish engulfing, it might happen with one candle or two candles, it doesn't matter. With two candles also it can make the movement like this. For suppose like this, a candle moved, it created a body like this. It might have wicks like this. Let me move this candle here. Let's assume like this. So this is also an engulfing pattern. Once this high of the candle is taken away, we will write it as an engulfing pattern, or we will consider it as engulfing pattern. Okay, so this is very important pattern. Remaining all patterns are not that much important, but still you can look in the Google or somewhere. Okay, if you focus much on candles, you will not get anything, but you have to understand basically what is the price action it did. Price action means where it opened, where it high created, a low created, where it closed, what it has done with the previous candle is the matter. Okay, then in this kind of movement, what price is expected is further it will move to the upside. Further it can move to the upside. So that means up to this there might be a series of candles forming like this. Like this candles would have printing. There is a series of candles with multiple bodies or multiple wicks, but finally price came here and the low is confirmed here. Okay, so at this point this engulfing adds the value. This engulfing adds the value. Nothing else is that much important. Okay, it might create a doji, it might create any base candle, whatever, but the base candle which will create, it might become for example this, if for suppose this is an red candle. Let me change the color of the candle. Let's suppose this is a red candle. Okay, this will create a further a base candle, and this will might become a demand when it this price comes here. Will change the color here. So when it came here, it might become a demand zone. This whole area will consider it as a demand zone. So this is the requirement of knowing candlestick and what engulfing it is doing, and what is it is doing. This is called a price action. Okay, based upon the candles, what it is doing, it creates a demand. Further, when it will come here, we can expect further up movement. uh, so this is what the basics. Okay, we'll see further deep dive and what and how we will do the analysis on that.